Am I audible? Am I audible?
Yes, ma'am.
Yeah. Okay. Yeah. I welcome all the participants for joining for this Budget 2025 updates webinar. So every month, Coral Metrics has decided to conduct a webinar for the purpose of enhancing knowledge for all our clients and all our friends and clients and others. So I request all of you to join every fourth Saturday of every month. And with respect to the budget, this year budget is something special, I should say, because on two grounds. One is that this is the 8th consecutive budget by our Honorable Finance Minister Nirmala Sitharaman Madam. Second, this is one of the shortest budgets. You know, the first budget when she presented, it ran for about 2 hours and 40 minutes, whereas this time she could conclude it within 40 minutes. But at the same time, it was very, very attractive for two reasons. One is that she has focused more on Viksit Bharat, which is she has the hope for India's prosperity and the leadership skills that we have in India towards the startup. Second is that a lot of incentives have been given for middle class people, because this was a long wait from this segment. So on these things, the budget has been very special. So with this background, I would like to introduce our Chaitanya, who is specializing in direct taxes. And to support him, we have Vamsi also to elaborate on the tedious aspect of budget amendments. So today we are going to have 3 sessions. One is on income tax amendments with respect to this budget, which is going to be applicable for the financial year 2025-26, and tedious applicable provisions for the financial year 2025-26, and also the GST. So with this brief introduction, I welcome Chaitanya once again to take over the proceedings on GST updates.
Thank you, ma'am. Thank you. And good afternoon, everyone. I extended a warm welcome to all of you in this insightful webinar of you on Budget 2025 and its income tax updates and key changes. The latest budget has brought a significant and tax reliefs and reform benefiting both individual taxpayers and business. Today, we will break down the key updates on headwise changes and the impact on taxpayer. Let's start with some of the biggest highlights in this year, Budget 2025. So in Finance Bill 2025, they have made changes in the on income tax, and I'm going to explain on key updates what and all they brought in the proposed budget. It's applicable from 25-26. So I'm covering on head by head, so it will be useful to every taxpayer and businessman. So that there is in previous year when compared to 24-25, so there is there is no taxable income on 7 lakhs. Now in the recent budget, they proposed to increase up to 12 lakhs. There is no tax. For individual taxpayers, they increased 12,75,000. It includes the standard deductions. So who are earning the salary 12,75,000 from 25-26, not required to pay any tax. So he will not liable to pay. He will not come under the income tax category. And and whose salary is 24 lakhs, when compared to 2425, when compared to, he can save the tax benefit around 1,10,000. So I will give you the brief example how he will save the tax of 1,10,000. So for example, if you are getting a salary of 24 lakhs, includes standard deductions, 24 lakhs 75,000. So example, if you are having a salary income of 24 lakhs 75,000. So as per tax regime of 24-25, if I deduct the standard deduction 75,000, so your net taxable income will come 24 lakhs. On that, tax payable will come 4,10,000. As per proposed budget 2025, so they brought the huge changes in the income tax. If you are getting the same salary in the 25-26, 24 lakh 75,000, after deduction of 75,000 standard deductions, the net income will be 24 lakhs. So on that, taxpayer has to pay only 3 lakhs on the tax payable. It ultimately he can save the tax around 1,10,000 rupees. The second case, for example, if he is getting a salary income of 12,75,000, so he is liable to pay tax for the financial year 24-25, 80,000. In the same, as per proposed budget, after deduction of standard deduction, his net taxable income is 12 lakhs. So that 60,000 will come no tax payable. This tax payable he is not required to pay because it will go under the rebate. He no need to pay any income tax to the government. When it comes to the third case, for example, he is getting a salary income of 13 lakhs, which is exceeding the 4 lakhs 75,000. In that case, after deduction of standard deduction, his net taxable income will be 12 lakh 25,000. As per earlier tax regime 24-25, he is liable to pay tax 85,000. But as per proposed budget 2025-26, after deduction of standard deduction, his tax liability will get reduced 60,000, 75,000. So only the tax relief will come whose taxable income is below 12 lakhs, and in case of salary person 12 lakh 75,000. Now in the second, there is a changes in the income tax from post property also. So tax pay in earlier there is some restrictions on the self-occupied properties. Only a taxpayer can show one property can show as a self-occupied property, and second property there are some restrictions. So in this budget they remove all restrictions. No need to declare two properties rental income. In earlier tax regime, so they consider as a deemed to let out. So, but for proposed budget, they introduce, so without any restriction, you can take two houses as a self-occupied properties. No need to declare any income from these properties. So, and then income from business and profession also. And income from business and profession also, there are some changes in the business or profession. Previously, for trust, the registration will be they are sanctioning on provisional basis, and after that they need to apply for final registration for taking 12-year registration. So now in the proposed budget, this one also they increase instead of 5 registration it was 5 years, and so they extended the registration 5 years to 10 years. After 10 years only we need to apply for renewal. And there are so many exemptions also. The exemptions on withdrawal of the national savings scheme. So previously, this in the budget, before budget on the whatever the interest you are getting on the national savings scheme, it's liable to income tax. In these budgets, this is also given a big relief to the who are having the getting the interest on the national savings scheme. So on that, not required to pay any tax. So entire amount is exempted. And so in the income from capital gains, so capital gains, there is no changes in the budget. In capital gain, there is no changes in the proposed 2025. The same rates before budget only, they brought so many changes in the capital gain. So, for example, if you are making the sale of equity shares and equity orient fund units, so these changes and all before budget only brought into the notification. So there are in the capital gain also we can divide in the only two ways. So sale of equity and equity for units. So sale of other than equity. So other than equity, it will cover everything. It's a like a building sale, land sale. So what and all capital assets, those and all it will come under the other than capital assets. So in case of long-term capital gain, the straight away it's a flat rate is applicable 12.5%. Earlier it was at 10%. So now in the before budget they increased this taxable 12.5%, and this tax previously this long-term capital gain exemption also previously it was 1 lakh it's there, now they increased to 1,25,000. Short-term capital gain on the equity shares and the equity orient fund units also it's a 15%. So in case of sale of other than equity shares, for example, like building, land sale, those and all, in case of a long-term capital gain, it will applicable to 12.5%. And short-term capital gain at the slab rates only, it's respect to slab rates will applicable. So as the taxpayer can choose another tax regime also, because this is a flat rate 12.5% without indexation. We can choose with indexation also, provide that the tax rate will be on land, it's at 20%. So we need to calculate the whichever is beneficial. So in case the property is purchased on or after 23 June 2024, then 20% rate will not applicable. It's concession rate. So as I told you, the salary income is exceeding 12,75,000. Taxpayer has to pay the tax. If he's earning the salary income up to 12,75,000, tax will come. So that taxpayer is not required to pay. It will go under the rebate under section 87A. He is not liable to pay any income tax. And for senior citizen also, they bought a change. So earlier the standard deduction was 50,000. So whatever he is earning the interest on savings, it may be a fixed or it may be a savings interest. So later he will get the 50,000 of standard deduction. So they were given the relief to the senior citizens also, 50,000 to 1 lakh. So it's a per year. So not required to pay on this 1 lakh. And rent also previously, so 2,40,000. Who are not paying the rent over and above 2,40,000, they need to deduct the TDS. This threshold limit has increased in the budget 2025. It's a 50,000 per month. It means around 6 lakhs per year. It's not required to deduct any TDS. He can remit the entire amount to the person. And whenever there is a fund transfer from one country to another country, so TCS also it should applicable, but educational loan there is a concession rate is applicable. In the education also previously the limit will be 7 lakhs without restriction 7 lakhs. Now the budget this limit also they increased 7 lakhs to 10 lakhs. So you can remit 7 lakhs to 10 lakhs without considering this TCS effect. So directly we can remit. There is no restriction on the. So everyone knows. So previously we were not able to file our income tax return after crossing the due date. So in earlier budget, they bought a good change. Taxpayer can file the updated return even though after crossing the due date. So earlier we can file maximum 3 years. In the recent budget, the updated return, they increased to till 5 years. So I will tell you how the income tax will calculate the late fee thing on the updated return. For example, if you are in a 20, earlier it's a, we can file 21-22 return till 25. So now 2021 return also we can file with the penalty of 17%. Example I will tell you. So for example, if you are filing the return 2024-25, the due date of this is 31st July 2025. The budget also, the due date will be the same. But if you see the financial year 2021, so the current provision, you cannot file the updated return. But in the budget, they released with an update, we can file the 2021 return also with the 70% of additional tax we need to pay over and above the normal taxes. The same way, in 2021-22 return also, we can file the budget as per budget provision. Current provision, we cannot file. But by paying additional 60%, we can file the 21-22 income tax return. But that due date will be the 31st March 2027. The same way, 2023 return we can file till 2020-26. Now also we can file with the additional tax of 50%. But as per budget provision, we can file till 28. They increase around 2 years. This is the due date of the 22-23. So they increase the time limit to additional 2 years, 28. Previously 26%. Now 28 we can file 22-23 return. Won't have missed out their income and not file their return in time. They can file the return before this due date. Same way 2023-24. Due date of this income tax return we can file up to 31st March 2027 by paying additional tax of 25%. In the same way, as per budget provision, this time limit will get increased 2027 to 2029. So by paying additional tax of 25%. So 24-25 due date will be the 31/7/2027. As per budget also the same provision. If you go to salary, here this new changes and all, it's there previously 7 lakhs, now it's a 12 lakhs, no? But these changes and all they done in that as per new tax regime only. There is no. Excuse me.
Chaitanya, there is one participant who's raising his hand. Probably we can take down his question towards the end of the session.
Sure.
Sir, please reserve your question. We'll be handling it towards the end.
Actually, the changes and all they done in the new tax regime only. There is no changes in the as per old regime. As per new regime, we cannot claim the deductions. In old regime only, we can claim this LIC, tuition fee, those things and all eligible. As per new tax regime, they will not allow any deductions. They will levy the concession rate on the taxable income. So this point, taxpayer has to remember while filing the income tax return. So I will give to my colleague Vamsi about the TDS and the rate of changes in the which are all applicable for 25-26.
I welcome Vamsi to take over the proceedings. Dear
Thank you.
TDS is also very important provision with respect to GST, with respect to income tax. So I request all of you to reserve your questions till then, so that we will be able to clarify on each and every question of yours. Thank you. Over to Vamsi.
Thank you, ma'am. Hello, good evening all. This is Vamsi there. Herein, I'm going to explain the proposed changes in threshold limits of TDS and as well as if there is any changes in rates. Okay. Coming to this first section 193, interest on securities. Earlier it was no threshold limit. Now they have proposed 10,000 rupees as a threshold limit for deducting TDS. Whereas in case of interest other than interest on securities, in case of bank, cooperative society, post office, for senior citizens, earlier the threshold limit was 50,000 rupees. Now it has been doubled, and they have made rupees 1 lakh as the threshold limit. In case of others other than senior citizens, for banks, cooperative societies, and post office, earlier it was 40,000 rupees. Now it has been updated as 50,000 rupees. In case of other cases other than bank, cooperative societies, and post office, now the limit is 10,000 rupees. Earlier it was only rupees 5,000. In case of dividend, earlier the threshold limit was rupees 5,000. Now the threshold limit has been increased to rupees 10,000. In case of income from mutual fund units, earlier the threshold limit was only rupees 5,000. Now the threshold limit has been increased to 10,000 rupees. Under 194B, the earlier threshold limit was only rupees 10,000, which is aggregate of amounts exceeding 10,000 during the financial year. But now it has been changed to 10,000 rupees in respect of a single transaction. And in the same way, 194BB, winnings from horse race, earlier it was 10,000 rupees in aggregate. Now it has been updated as 10,000 rupees per single transaction. Under 194D, insurance commission, the rate is like 5% for individual and HUF and 10% for other than individual and HUF. Earlier, the threshold limit was only rupees 15,000 rupees. Now the threshold limit has been increased to 20,000 rupees. Under section 194G, income by way of commission, price, etc. on lottery tickets, the rate is 2%. The threshold limit is earlier the threshold limit was 15,000 rupees. Now that has been increased to 20,000 rupees. Under section 194H, commission or brokerage, the rate is 2%. Here, threshold limit was only 15,000. Now it has been increased to 20,000 rupees. But in case of rent, 94I, 2% will be the rate of TDS in case of plant and machinery, and 10% will be in case of land and building. Earlier, the threshold limit was 2,40,000 during the entire financial year, but now it has been updated to 50,000 rupees per month or quarter of the month. So, if it is 6 lakhs per annum, you need not deduct TDS. Whereas in case 194J, these for professional or technical services, earlier the threshold limit was 30,000 rupees. Now the threshold limit was increased to 50,000 rupees. Under section 194 LA, income by way of enhanced compensation. Earlier the threshold limit was only rupees 2,50,000. Now it has been doubled. Now the threshold limit is 5 lakhs rupees. Under section 194 LBC, income in respect of investment and securitization trust. Now the rates, earlier the rate of TDS is 25% if pay is individual or HUF and 30% if in other cases. Now the rate of TDS has been reduced to 10%. Under section 206C, TCS on timber or any other forest produce not being tendered is obtained under a forest lease, and TCS on timber obtained by any other mode other than under a forest lease. Earlier, the TDS rate was 2.5%. Now the rate TDS has been reduced to 2%. Under Section 206C, remittance under LRS Overseas Tour Program Package. Earlier, the threshold limit was only rupees 7 lakhs. Now, after budget, the limit has been increased to 10 lakhs. So, till 10 lakh rupees, remittance can be done under 206C. And as my colleague already explained, TCS on remittance under LRS for purpose of education, financed by loan from financial institution. Earlier, the TCS rate is 0.5% after 7 lakhs rupees. Now that has been removed, and there have been it is allowed to transfer entire amount without any TTS if the amount is bought from the financial institution and it is for the purpose of education. And thank you very much, all of you. And now I'm handing over the session to Sujatha ma'am.
Thank you very much, Vamsi. You can stop sharing. Yeah. So we have completed the first portion of our webinar today, which is on income tax. Now I leave the floor open for any questions. See a one raise of hand. Sir, you can unmute yourself and ask the question. All right. So if I have to summarize the entire finance budget for 2025 with respect to income tax perspective, with respect to salary, there has been substantial increase in the exemption limit and the structure, like the threshold limits as well. This was a long pending from since the last change happened in the year 2021. And then they came out with the new scheme, old scheme. So this is a very welcoming change with respect to the salary for middle class segment of people. So then when it comes to the income from house property, this is also one of the very important things. There are exemption has been given for 2 properties. It means that if you have a 2 self-occupied property, one you can have as show it as a self-occupied property, and the other house which is there in your name can also need not be shown or reported as a deemed let out. So this is also one of the important change which was expected for a long time, because it's very common to own 2 houses in the current scenario. So the government has realized that and made this amendment. And when it comes to capital gains, there are a lot of changes have been made in the interim budget. So that's the reason why we do not see any change, very less change with respect to securities. Apart from that, not much change has been done in the capital gain part of it. When it comes to interest income from other source, there are changes have been made in the threshold limit as well as in the rate of TDS. So this is going to help a lot of senior citizens. So this is the sum and substance of changes that have been done with respect to the direct tax. Now let's move on to the GST portion of it. As far as GST is concerned, we all know that it is an indirect tax. If you look at in the past budget, say 2000, before introduction of GST, all the indirect tax amendments used to take effect immediately. Say, for example, any rate change with respect to any product. It can be a car, or it can be a petrol, or it can be any other product for that matter. During the service tax times or VAT times, the effect used to take immediately. So after the budget is announced, immediate effect used to take place. Whereas if you see in the current proposition, there is a major shift in the thinking of the government because of introduction of GST. The reason being, when GST was introduced, GST Council was also given very key role to play in terms of suggestion and any amendment with respect to GST. So because of that reason, unless and until the recommendations are proposed by group of ministers to GST Council and GST Council's chairman approves, that amendment cannot be passed in the parliament. So that's the reason why the GST Council takes predominance over the budget in terms of GST amendments. So this 55th GST Council meeting last time when it was held, lot of amendments were discussed, and after that, whatever changes with respect to rate or any immediate attention was done through notifications. The changes that could not be addressed because of majority approval or which requires the parliament approval or bill needs to be passed, only those set of amendments were proposed in the budget. So these amendments were already discussed, already known to public, already given for public consultation as well. So whatever amendments were proposed in the 55th GST Council, majority of them have been tabled in the Finance Bill 2025. So once the bill is tabled, later it gets passed as an act. So now let's move on to the amendments with respect to GST. I'm just sharing the screen for all of you. Just confirm if it is not visible. Hope the screen is visible. So in next 20 minutes, we are going to discuss about the major amendments that have taken place in GST after the 55th GST Council meeting and the Budget 2025 bill. First and foremost is that input service distributor. You all must know the basics of who's an input service distributor. If you look at in the past, from 2017, the registration of input service distributor was not made mandatory. Who's an input service distributor? Assuming, let me explain you with an example. There is a branch office, there is a head office. Majority of the functions are handled only from head office. Branch office acts as a marketing office. It means that there is no sale or majority of operations are not handled by the branch. Only the services which are delegated from the head office are done by the branch office. So what happens? The expenses that are incurred by the branch, it is just not relating to its own expenses, but relates to the common expenditure. So if I have to put it in simple terms, the head office is in Delhi, branch office is in Bangalore, branch office incurs expenditure towards marketing, sales promotion, and other expenses, rent and other expenses. This cost is called as common cost, which is just not relating to the particular branch or any other branch. It is relating to the whole company as a whole. If that being the case, the expenses, the input tax credit relating to those expenses needs to be distributed to the respective other head office, other branch offices, and also to the head office. So this is the role of input service distributor. This is a role of input service distributor who has registered as IST under GST. Whereas if you see in the act, in practicality, this was not happening. So some of them were registered as input service distributor, or some of them were not distributing the input tax credit, and the suppliers were also directly billing the head office. Say for example, if any marketing expenses is incurred by the branch, instead of sending the expense bill to the branch, the supplier was directly sending the bill to the head office. So because of which the supplier had to charge IGST as per the place of supply provisions. So what's wrong in doing such way of mechanism of doing such way is that the states were losing its revenue. whenever there is a IGST is charged, the first the input tax credit goes to the central. Later on, it gets distributed to the state, because of which the state government revenue was getting delayed. Many of them were doing cross charge in the sense the head of the branch office will have to bill the head office once the expenditure was incurred. So this was some of the various methods through which the tax was getting distributed. To avoid such differences, to avoid such conflicts, the input service distributor registration also made compulsory. And also the new provision that has been brought in the Finance Bill 2025 is that whenever there is an RCM incurred by the input service distributor, in our example by the branch, there was no mechanism to make the payment of RCM by the IST. Whereas now they have amended the provision relating to IST as well as the form also. The form for filing input service distributor is GSTR 6. The GSTR 6 also got amended, because of which the input service distributor can make the payment, and also the RCM mandatorily needs to be paid by the branch office only. No longer it can be paid by the head office. So this is one of the key important provisions with respect to IST. Next comes the time of supply for vouchers. If you look at section 12 and 13 of CGST Act, there were time of supply provisions were separately distinguished for any person who's making payment for vouchers. Let me give you an example. I have Kalyan Jewellers vouchers. Somebody has gifted to me. So my friend will buy a Kalyan Jewellers voucher and then gift it for my birthday, which will have a validity of 6 months. And I can encash it on the same day, the day on which my friend gifted me, or I can wait for 2 months, 3 months at my own wish before the expiry of the voucher. As per the place of time of supply provisions, the time of supply for such vouchers, as per the earlier provisions, it used to be the time of redemption. At the time at which the voucher was getting redeemed was the time of supply. If you look at it, whether the time of the vouchers is a goods or service was a strong point of debate. In the many high courts, it was held that the voucher is not a goods. In some of the advanced ruling authorities held that no, the supply of voucher is also goods or services, so it needs to be taxed at the time of supply. Whereas RBI held that, Reserve Bank of India held that voucher is just like a money instrument. It cannot be treated like any other. It's not a money, but it is an instrument for discharging the payment. So if having these anomalies in place, the GST Act also went through the amendment in the form of the defining of voucher itself. Now, as per the current scenario, voucher is neither a goods nor a service. It means that it will fall under Schedule 3. It will be treated as an actionable claim. If it is an actionable claim, it cannot be that there will not be any supply. It cannot be called as a supply. Sale or selling of or buying of voucher cannot be called as a supply. When there is no supply, there is no levy. When there is no levy, there is no time of supply. So having this background, they have removed the time of supply provisions relating to vouchers. So when vouchers are sold, in the given example, earlier at the time of redemption, when I went to Kalyan Jewellers for redemption of that gift vouchers, the Kalyan Jewellers were expected to discharge the GST liability. Whereas now, as per the current provisions, at the time of sale, my friend, when she buys the gift voucher from Kalyan Jewellers, at that point of time, Kalyan Jeweller needs to discharge the GST liability. It has been treated on par with any other goods. Secondly, it is at the time of trading, whenever there is a trading of voucher happens, there will not be any tax because it is neither goods nor supply of services. Third, in case of any income that you receive in the form of commission or any other service charges are rendered, any other service charges are collected for sale of those vouchers, then only to that extent the GST would be applicable, not on the entire sale value of voucher. So this has been clarified through the circular 243, which was issued on 31st of December 2024. Then when it comes to the third amendment in the GST, this is a very long story. If I have to make it short, because our finance minister herself has presented the budget in 40 minutes. Myself, Chaitanya and Vamsi take this session for 1 hour. I think we'll be doing injustice. So let me make this story short. When it comes to amendment of section 17(5)(d), there is a provision in the GST Act, CGST Act, something called as blocked credit. Whenever there is a credit relating to immobile property, expenditure relating to immobile property, then that credit cannot be availed. So there was a famous landmark decision in the case of safari retreats. So this is an age-old, about 5 years this litigation was going on before the High Court of Odisha, saying that there was a company called Safari Retreat. They were holding a property. They were constructing the property for a mall. Once the mall was constructed, they were letting out the mall for business purposes. So the Safari Retreat company argued that me having spent those expenses for the purpose of business, purely for the purpose of business, then why can't that property be treated as a just like plant and machinery? Why plant or machinery? Why should it fall under section 17(5)(d)? It may be an immobile property, it may not be an immobile property, but if you look at the function of that property, it is purely used for furtherance of business. So the company should be very much be eligible for input tax credit. So this was the contention before the Odisha High Court. Odisha High Court also held that yes, it appears to be plant and machinery. Plant, and if it had been plant and machinery, then you are not eligible. Whereas plant or machinery is the wording that is given in the section 17(5)(d), you are eligible for input tax credit. This was the judgment passed by the Odisha High Court. Whereas revenue was not satisfied with the High Court's judgment, they went for appeal with the Supreme Court. This matter was pending before Supreme Court for the past 3 years, and most awaited judgment came in the month of about 2 months ago, stating that this matter should be remanded back to the High Court again because the functionality test should be performed. What is functionality test? Assuming there is a theater, right? Cinema theater, we all know. If somebody is constructing a cinema theater, that itself is a plant for him, right? Because through which he is going to do any other service. Say, for example, we have to compare it with the ice cream manufacturing plant. So through using the ice cream manufacturing plant, the owner of the business is going to manufacture ice creams. So the output is coming out of that plant. Similar analogy, if you apply for a cinema theater is also as good as plant. Same way, when a business owner constructed a mall purely for the purpose of renting it out, how come that input tax credit can be denied? If he is using it for his personal purpose, then he will fall under section 17(5)(d), whereas this is purely used for his business purpose and not on his own account. It is going to be for the furtherance of business. So input tax credit should not be denied. Second, if you look at the lacuna in the Act, in the provisions of section 17(5)(d), you all know that each state has its own SGST. CGST is the Common Act. SCST, we have Karnataka Goods and Service Tax Act, Tamil Nadu Goods and Service Tax Act. Likewise, each state had to pass its act. Out of 29 states, majority of the states did not have the word plant or machinery. It had plant and machinery. It means that in some of the states there was a clerical error by the government at the time of, say, enactment of the bill or act. So because of the error, instead of having plant or machinery, it was made as plant and machinery. So it was purely the government error. It is nothing to do with the assessee's interpretation. Because of their error, the assessee was eligible to claim the input tax credit. This was the fact which came out after the judgment. Whereas the High Court, Supreme Court remanded the matter back to the High Court. The matter was again put to dispute. But having said that, the Safari Retreat was rejoicing because of the simple reason that they were allowed to take the input tax credit. Now came the problem. The government realized that there was an error in the law. Then the secretary came out in the press release, publicly announced that we apologize for the mistake, clerical error that happened in the act. It should have been plant and machinery, whereas wrongly it was typed as plant or machinery. So it is our error. So it was publicly confessed. Because of this reason, the government, to avoid passing on the benefit of input tax credit, retrospectively they amended the section 17(5)(d) as instead of plant or machinery to plant and machinery. Because of the word plant and machinery, this is a strict interpretation. Unless and until it fulfills the plant as well as machinery definition, the mall, that is the constructed building, the immobile property, will not fit into the definition of plant and machinery. So he was not eligible. The person, whoever availed in the last 7 years, 8 years, whoever availed the input tax credit had no option but to reverse at this point along with the interest. So this is the major amendment which was much spoke about after the 55th GST Council meeting. So in the GST, we find that there are a lot of retrospective amendments are happening. So this is being the law of the land. As taxpayers, we have to be very careful in following the law, as well as whenever there are certain amendments are coming up, we have to make note of it. Next comes the invoice management system. We all know that now the recently introduced invoice management IMS system has come in. What is IMS? If you log into your portal, say the supplier, what he does, supplier means the seller updates his GST return by filling up all the invoices, whatever he raised during the previous month. Say we are in the month of February, on or before 11 or 13th, whatever may be the date, he uploads all the invoices relating to the month of January before the due date by filling up all the particulars of invoice number, amount, GST, and the supplier and the recipient, buyer's name. All the details are filled up and filed through GSTR1. Once the GSTR1 is filed, it gets reflected in GSTR2B of the buyer. During the intermittent process, there is something called as invoice management system, through which the buyer gets to see what the seller has uploaded. In case, if he finds that there is any error in the reporting by the seller, he can always accept, reject, or he can keep it pending. Why does he reject? If the data reported by the seller is wrong in terms of rate or in terms of value, he can reject it. He can accept if everything is correct. Whatever he purchased, all the other records are showing correctly, then he can accept. If he has not received goods or there is some discrepancy, or if he wants, he's unable to decide for various reasons, he can always put it as defer. If he does not do any action, accept, reject, or defer, then it amounts to deemed acceptance. So this was introduced in the invoice management system. This is the background of invoice management system. But having said this, it was a feature which was enabled in the GSTN portal. You all know that GSTN portal cannot dictate the law. It has to be in the GST provisions in the Act, as well as it has to be, you have to find a place in the rules also. So for that, they have made this amendment in the form of rules and provisions in the Act they have introduced. So why they have introduced? Because this is going to reduce lot of litigations. But one major thing what I can see is that, assuming I am the supplier, I can be a supplier of goods or supplier of service. I can be anything. I sell some goods, right? I sell some goods. It will appear in buyer's GSTR 2B, right? He will be taking the input tax credit. After few months, if I raise a credit note, after few months, why do I raise a credit note? There should be for some reason for raising the credit note. Either the buyer should return the goods, number one. In case of services, if he is not satisfied with the services of the rendering of services, then in such case also, he will be, if there is any deficiency in service, then also he will not pay. I am forced to raise a credit note. So credit note can be initiated only by the supplier of goods or supplier of services, not by the recipient. So now what is happening in the, once this invoice management system is introduced, once I have paid the taxes by filing my GSTR 1 and GSTR 3B, because whatever I report in the supplier reports in the GSTR 1 will get auto-populated in the GSTR 3B. Whereas if I raise the credit note, then obviously the GSTR 3B liability will also come down. To reduce the liability, there is every possibility that the supplier can misuse the system. To prevent this, they have come out with this invoice management system. Second thing is that in case after taking the input tax credit, if the supplier does not pay the taxes as per the recent litigations that are going on, the department is collecting that money from the recipient, that means from the buyer. So buyer is put to hardship, not only paying to the seller. First time he has already paid the entire amount to the seller. Because the seller has not filed the returns, he ends up paying once again to the department, because he does the seller has not paid the taxes to the government. It is not appearing in his 2B. He is not able to take the input tax credit in the while filing his GSTR 3B. There also he loses. Mistakenly, if he had taken, then I'm talking about 2-3 years ago, because before introduction of 2B, 2A was there. So what the supplier used to do, he used to file only the GSTR 1, not the 3B. So it will appear in 2A. From 2A, relying on the 2A, GSTR 2A, the buyer of the goods used to take the input tax credit in the GSTR 3B. Later on, when the scrutiny comes from the department, he had to pay the taxes along with interest. To avoid this, a transparent and well-governed, self-controlled, auto-populated invoice management system was introduced. This is in place since October 2024. So this has been popularized. Now it is functional. Then the government has come out with the changes, corresponding amendments in the rules as well as in the Act. So now next change, if I have to say, amendment in the GSTR 3B. Now the GSTR 3B can be filed only after generation of 2B. 2B needs to be preceded by IMS. So If you going forward, this is going to be completely self generated auto-populated return. All we have to do is file GSTR1. If you file GSTR1, then the same thing is going to get auto-populated in the GSTR3B. GSTR3B can be filed only after downloading of GSTR2B. It means that before filing the return, downloading and looking at GSTR2B as well as IMS is going to be mandatory. So it is going to be completely self-driven mechanism. The taxpayer, what he needs to do is upload his GSTR1. That means the sales done during the month, and then pay the taxes after reducing the input tax credit, looking at it from GSTR2B, which is also going to be self auto-populated from GSTR2B. So GSTR3B cannot be edited going forward. All the fields will get frozen. GSTR3B is going to be just a payment. What you need to do is just generate the challan only for making the payment and uploading the return. So it's going to get simplified. That's what we see as of now. But practically, when you look at it, it's not that it's going to be as simple as I say, because there would be some Rule 42 reversal. There could be some reconciliation which needs to be done for temporary reversal and permanent reversal. At the same time, the government has introduced input tax credit claim availment and opening and establishment of opening and closing balances. So a lot of things are going at the background. So one side we call it as easy, but it requires a lot of reconciliations and working papers to make it simple and logical. So next is that track and trace mechanism. This is also an extension of IMS. So through this mechanism, what they are going to do is that movement of goods will get tracked from manufacturing till the point of sale. You may ask, is it possible? What is the need? Because we have GSTR1, we have e-way bill. Over and above that, one side we are saying we are going to simplify the system, ease of doing business. Then what is the point in again bringing in some right from manufacturer to sale for this track and trace mechanism of GST? The answer to this is very simple. Government wants to track certain goods. It's not for all commodities. It is only for selected commodities. Say, for example, pan masala or cigarette. There are certain sin goods which goes unnoticed. So the government wants to have a track of what is the source of manufacture, who's selling it, who's manufacturing it, where is it originating from, and how the supply chain is working, so that they can track the entire supply chain and ensure that there is no leakage of tax at any point of time, any point in the supply chain. So this is the reason why they have introduced this. This may not be for any packaged goods or any other item. Now currently, if you look at it, what are the goods is not clear. Going forward, government will come out with the more clarity. So these are some of the major changes in the GST. Thank you so much for your patient listening. Now I leave the floor open for any question and answers.
Thank you all for being a wonderful audience. I saw someone raising their hand during the conversation. Mr. Vallesh, I think so. Mr. Vallesh, are you here? No, I think Mr. Vallesh is not here. Okay. I know it's been more than an hour. If anyone wants to have any questions, you can please raise your hand. I will open the floors for you.
Thank you so much for.
Yeah. Thank you. If anyone has any doubts, we'll be posting this video in our YouTube channel as well. You can post it in the comments. We'll reply to you as soon as possible. Right?
Thank you, Avkash. Thank you for
Thank you.
inviting
Thank you, ma'am. Thank you, Chaitanya. Thank you. So thanks for Vamsi for being a wonderful host as well. Thank you all. Wish you all success and best.